Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday, the 30th of April 2019, and we're producing the first part of a three-part interview with former child prodigy, MIT scholar, hedge fund manager, and owner broadcaster of Macro Voices, Mr. Erik Townsend. Today we're going to discuss Erik's views on the precious metals markets, currency markets, and how long he believes the US dollar will remain the world's reserve currency, and what it may be replaced with. So let's get on to it. We hope you enjoy. Erik, welcome to Illuminati Silver. I would like to thank you for agreeing to speak with us today. Perhaps we can start off by you giving us a brief description of who you are. For although those of us who are deeply immersed in the precious metals markets are aware of your credentials, we also have newer members who perhaps aren't.
Sure. Well, I was a technology entrepreneur, software guy, ran a software company in the 90s, retired at a very early age, quickly flunked retirement, realized that trying to retire in your 30s drives you crazy, which I think is the experience of most young attempted retirees from the tech industry. And I eventually reinvented myself as a full-time private investor and later went on to run a macro strategy hedge fund for 5 years. So my background is technology, but for the last 10 or 15 years, my primary focus has been markets and investing primarily from a macro perspective. I have written a few pieces on gold and silver over the years, but because it definitely fits into my long-term macro view of the world. I think that there's very good reason to think that owning gold and to some extent silver, depending on where you live, is going to be very, very important in the future. I'm not quite sure we're at the point where we hit the critical phase of that yet, but eventually it's going to be really important to own gold, and it's something that I pay a lot of attention to.
Well, that's great. Now, prior to our interview, we agreed that perhaps we would begin by you stating your view on the precious metals market, with emphasis on gold and silver, because they're the two main metals that our listeners and subscribers are interested in. And then perhaps move on to asking the question, are precious metal prices manipulated? And why are the metals market the target of so much conspiracy theory?
Okay. Well, why don't we start with the first one, which you said the state or my views on the metals market. I'm going to twist your question a little bit because I don't think a view on the metals market in isolation is really relevant. What I have a view on is the global economy and where we sit in generational cycles. There's a book called The Fourth Turning by Neil Howe that I can't recommend strongly enough that explains the long wave business cycle, the business cycle that lasts 80 to 100 years. The final quarter of that business cycle that lasts 20 to 25 years is called a fourth turning. And fourth turnings are the times in history when really big changes happen. The prior fourth turning before the current one that we're in right now was the Great Depression and World War II. The one before that was the Civil War. The one before that was the American Revolution. The one before that, I'm not that good at history. I can't remember if it's the French and Indian Wars or which one, but it's major changes in world power that occur during fourth turnings that happen every 80 to 100 years. We're in a fourth turning, according to Neil Howe, the author of the book. We're in a fourth turning right now, which began in 2008 and which should probably end around 2030. So these are the times in history where major institutions, and the predictions of the fourth turning in the book, is that what happens in fourth turnings is lots of people across society lose faith in major institutions that everybody has believed in for generations. And they start to question those major institutions, and they tend to elect extreme leaders. Well, certainly with President Trump, although I'm sure you have a number of people who are huge fans of the president and probably probably a number of listeners who are not, I don't think anybody can dispute that he is different from the norm. Likewise, if the election were to go the other way, let's say Bernie Sanders had been elected president, okay, that's another extreme choice. And what happens in fourth turnings is not only do people make extreme choices, but society tends to flip-flop from one extreme to the other. And that's one of the reasons I'm watching the 2020 election very carefully. One way or another, there's another cycle that occurs through history, which is reserve currencies tend to eventually sort of fall out of favor. We've never had a single reserve currency for the history of the world. It changes every 100 years or so. Why does it change? There's a theory in finance called Triffin's paradox, which explains that basically the way you choose the reserve currency is you're choosing whichever currency is the strongest credit. Well, what is the consequence of being the world's reserve currency, as the U.S. dollar has been since 1944? It basically gives the issuing nation a license to borrow and spend beyond its means, because when you're the reserve currency issuer, you can get away with deficit spending, borrowing and spending beyond your means, because there's so much artificial demand, not only for your currency, but for debt denominated in that currency to serve as central bank reserve assets, that you can get away with a whole bunch of deficit spending, and certainly the United States has done that. Well, what Robert Triffin predicted way back in the late 1950s is eventually this cycle runs its course to the point where you get so indebted that that currency is no longer the world's it's no longer suitable to be the world's global reserve currency, and the rest of the world dumps it and moves on to something else. Now, we're seeing the early stages, only the early stages of that cycle, with things like Sergei Glazyev's de-dollarization campaign, where Russia and China are actively lobbying other BRICS countries to ditch the dollar in international trade, and particularly for the sale of crude oil. They're encouraging oil exporting nations to use other currencies other than the U.S. dollar for the export of oil, because they want to destabilize the dollar as the world's global reserve currency. Now, frankly, the global reserve currency is going to stay the U.S. dollar for the immediate future for one reason, which is immutably, inarguably true, and that is that there is no suitable alternative at this time. And I double underscore those words, at this time. There is no viable alternative to the U.S. dollar, because there is no viable alternative to the U.S. Treasury bond market in terms of a sovereign bond market that can absorb central bank-sized capital flows without moving the market price in the process. There is no viable competitor to the U.S. bond market, and for that reason, the U.S. dollar is cemented in its role as global reserve currency until such time as the many people around the world who are now motivated to create that alternative come up with something that's actually viable. So we have a situation where the world's global reserve currency, the U.S. dollar, is not in that role because everybody around the world unanimously agrees that it's wonderful and we love the United States and we love U.S. foreign policy, and we just can't get enough of Donald Trump telling the rest of the world what they have to do. We love it. That's not the circumstance. The situation is the world is stuck with the dollar as their global reserve currency until such time as somebody comes up with a viable alternative, at which point a lot of governments around the world are ready for change. At least that's my perception of the situation. Now, if you see the world as I've just described it, you've got to realize, wait a minute, okay, maybe it's not happening right now or next week or next month, but at some point, maybe before this fourth turning is out at the end of 2030, that the world is going to go through the same kind of dramatic change that occurred between the world wars, where the British pound sterling had been universally perceived as forever being the global reserve currency. Nothing could ever compete with it until World War II changed the power dynamics, and all of a sudden it was a clear choice that it had to be replaced by the U.S. dollar. I think we're headed into a period of history where that level of change can occur. What change specifically is going to occur? What's going to replace the U.S. dollar? I don't know. I just wrote a book about just a possibility. It's not the answer. It's a one possibility, which is that digital currency, and I don't think a cryptocurrency, but a digital currency which other governments create and adopt as an alternative to the dollar, might be the challenger. As we go through this period in history, though, what 10,000 years of history has taught us is if you're expecting a lot of volatility in currency markets, there is no more effective hedge than precious metals that are going to retain their purchasing value. Frankly, as much as gold bugs want to think otherwise, precious metals have never been, over the long period, a fantastic get-rich asset. What they have proven themselves to be just better than anything else at is a stay-rich asset. You park your wealth in precious metals, and they don't lose purchasing value even as crazy things happen in currency systems around the world. So that's where I see the real value of gold and silver, particularly gold, is its proven track record as weathering the storm when crazy things happen to currency markets. And I think that the U.S. dollar's status as the world's global reserve currency is almost certain to be seriously challenged in the 2020s. Now, does that mean it's going to be, obliterated, or does it mean the United States is going to use its military might to cement its role as the global reserve currency issuer for the next 100 years? I don't know, but I know it's going to be a really volatile, dramatic time where a lot of ups and downs are going to occur. And I know that if I look at 10,000 years of history, nothing beats gold and silver at hedging that risk.
Perhaps focusing just for a brief moment on a reserve currency option. Jim Rickards has often quoted SDRs, special drawing rights, for the want of a better expression, the currency issued by the International Monetary Fund. A lot of, shall we say, pumpers are saying China is accumulating as much gold as it possibly can because it plans on linking its currency, the yuan, to gold, and therefore it will then become the next world reserve currency. Just on those two sort of brief areas, what's your opinion?
My views differ from Jim Rickards in a number of areas, although lately I don't know if he read my book or what, a lot of his tweets seem to reflect a lot of the ideas in my book. But here's where I disagree. I think that what Jim is trying to describe is a specific outcome as if he or anyone else really knew the answer. I think China and Russia are smart enough to recognize that they don't know the answer either, but they do understand what I just said in reaction to your first question. So do they specifically have a plan to, let's say, back the yuan or the ruble with gold in order to make it more attractive and promote it as the world reserve currency? Or are they instead going to combine forces and create a joint Russian-Chinese new currency, which is going to be backed by gold? Or could it be that they're going to join forces to create a digital currency which works using distributed ledger technology, what a lot of people call blockchain, although blockchain is really just the first version of distributed ledger. Are they going to do that and create a Russian-Chinese digital currency? Or are they going to recognize, wait a minute, that's really still not going to sell the world, and we'd be better off to maybe start a consortium that gets the European Union involved in creating a digital currency that's backed by gold, and there's a new supranational gold-holding central bank which owns all these gold reserves behind a new global currency. I don't think that the people in power in China or Russia are so arrogant as to think they know for sure what the answer to those questions is. What they do know is that no matter how it goes down, having plenty of physical gold hedges their risk against other currencies and puts them in a position of power that if backing something with gold, whether it be a new conventional currency, a digital currency, or anything else, it keeps their options open. So I think both Russia and China totally get the message. They understand what's going on. But I think that Jim's describing specific scenarios, which are entirely plausible. But I don't think that that's decided yet. I think they're still waiting to see what happens. And I think that the digital currency angle, this is the reason I wrote a book about it, is going to be very interesting. Now, it sounds like I have some, read the book and you'll get the answer. Now, the book doesn't answer anything. The book poses what I think are all the questions you need to continue to ask yourself as this story unfolds on the public stage over the next 20 years. And I think that eventually we're going to get to a fully digital global currency system. And I don't mean, a lot of people say, we already have digital money. The current financial system is digital. Nonsense. We don't have digital cash. We don't actually have money that exists on a distributed ledger where there is no single entity that controls the governance or issuance of it. There's a whole new architecture of trust which distributed ledger technology enables. But I don't think these cryptocurrencies that are backed by nothing, and they're really just popularity contests, are going anywhere. I think it's much more likely to be a gold-backed digital currency with state sponsorship. Do we get there from here by, let's say, Ethereum or one of the other really cool cryptocurrencies evolves into that? Or do the state actors ignore all of the cryptocurrencies and create their own because they have the power of government authority to create something that's in a different category? I have no idea. Neither does anybody else, including Jim Rickards. We're going to find out as history unfolds over the next couple decades.
There is, of course, the possibility that what determines that is how we get to that stage. If we get to that stage because the process is planned and the architecture is created, or do we get to that stage because financial markets just collapse beforehand, before this can actually be put sufficiently in place? And therefore, maybe an Ethereum or other form of cryptocurrency claims some form of dominance, or is that perhaps just for the birds, would
Well,
you say?
I think that the important part of this for investors to understand is we're coming into a time where dramatic change is entirely likely. The pressure has been building, the aversion to the U.S. dollar having the dominance that it has over the global financial system, and the frustration that that's led to with other governments. It started with BRICS countries like China and Russia, but now it's the European Union publicly standing shoulder to shoulder between the European, I forget what her title is, but the foreign minister from the EU and the foreign minister from Iran standing shoulder to shoulder at the United Nations in New York City, denouncing the irresponsible actions of the United States in abusing its authority as reserve currency issuer, and describing their intentions to launch a workaround to the SWIFT payment system so they won't be subject to U.S. government interference in perfectly legal affairs of other countries. Wow, that's a big change for things like that to be happening. Right now, it's a lot of talk, but and the thing is, there is no viable alternative to the U.S. dollar because there's no bond market with the depth and liquidity of the U.S. Treasury market. There's a lot of people that are motivated to create that alternative, and that's what we have to keep our eye on. What I know for sure about precious metals investing is if you have precious metals, at minimum, you're going to be hedged against volatility that's going to exist in conventional currencies. And at best, you're going to be in a position of maybe, and it's just a maybe, of a spectacular windfall profit, because although I don't think gold ever gets remonetized as the primary money system, I think the way that that the creators of a new digital currency that's designed to replace the dollar as the world's global reserve currency, one of the ways they could differentiate and create value is to link it to hard assets somehow, whether that be full gold backing or partial gold backing. I don't know. I've got a whole chapter in the book that talks about some of the possibilities. I don't predict any specific outcome. I try to tell you, here's what to watch for. And, it's such a cacophony of moving targets all at once. So many different geopolitical factors, technology factors, all coming into this. But one way or another, if you've got gold and silver in your portfolio, you're going to be hedged against the risk of potentially dramatic swings in currencies. Now, I really have to qualify all of this by saying, if you're going to try to time the market and think you're smart enough to know better than the rest of the market when things are going to happen and what order they're going to happen in, frankly, you're in pretty dangerous territory to try to do that because usually it's too hard. But if you want to know my answer, I don't think it's time yet to be super bullish on gold. I think that there's a lot of really strong reasons to think that the artificial liquidity squeeze that we're seeing right now for the U.S. dollar is likely to push the dollar higher and gold lower in the short term. Now, I could be wrong about that. Certainly, trying to time the market and pick the bottom is oftentimes a fool's errand. But I do not think that we're quite there yet in terms of a bottom in gold prices and an incredible generational buying opportunity. I think it's coming soon in the next couple of years probably, but I don't think we're there yet.
Well, we've advocated for some time that the US dollar is going to, or is likely to remain standing far longer than many other global currencies. And of course, we've seen, even with the emerging market crisis, we've seen situations whereby their currencies have come under threat. What's the first thing they do? They buy the dollar as a safe haven asset. Is that not just going to continue
Yeah,
reasonably into the future? Would
I
you
think not
not
only
say?
reasonably into the future, but it can potentially extend for a long time. I just interviewed Dr. Lacey Hunt on the Macro Voices podcast last week, and he was really emphatic on this point. He said, look, and I'm going to expand a little bit on Dr. Hunt's commentary and add some of my own perspective to it. But you've got gold investors who tend to get caught up in these stories because the people pimping gold like to tell them about, look at this hyperinflation that happened in Argentina or Zimbabwe or wherever. That could happen tomorrow to the US dollar. And when it does, if you have gold, you're going to have this windfall profit and everybody else is going to be poor and you're going to be rich. Here's the fallacy in that. If you look at history, what history teaches us is that small, systemically unimportant currencies, like the Zimbabwe or the Argentine currency, they do tend to blow up and hyperinflate when you get excessive debt bubbles. But for large, systemically important countries and their currencies, like the euro, the yen, the US dollar, what tends to happen is excessive debt burdens do create this debt overhang where there's this law of diminishing returns. The benefit of that debt in stimulating the economy declines the more that there's outstanding debt. The result is, and I think Japan is the perfect poster child case of this. You get a very serious. It's not like there's no risk and it's all fun and games. It's a horrible, horrible outcome. But that outcome is economic stagnation that can last at extremely low interest rates and low rates of economic productivity for decades. And I think that where we're headed economically, before you consider the geopolitics and the populist response of the people of the world, if you were just to look at this economically, where we're headed is the entire developed world becomes Japan. So the U.S. economy and the European economy and the Chinese economy and the Russian economy and everybody else ends up in the same situation Japan has been faced with chronically low interest rates, economic stagnation on the verge of just long-standing depression. There's no real growth in the economy. It's an ugly situation, and there's just not much anybody can do with it. But it does not result in this catastrophic, Zimbabwe style of hyperinflation. What it results in is deflation, which is persistent and lasts decades. Now, the place where I think you have to change the picture a little bit is say, wait a minute. Do you really think, if you look at what's going on politically now, the divisiveness that you see in the United States, and particularly you look at France and the rest of Europe and what's going on with the Yellow Vest movement, okay, a lot of people are really fed up. Most of them don't really understand the macroeconomic, backstory in great detail. What they do get intuitively, and they're correct about it, is the people are getting screwed. the haves are, the rich are getting richer. Nobody really understands the mechanism. They tend to blame the 1% when really it's the 0.001% of entitled, well-connected bureaucrats who are the real problem. But what happens is the people get to the point where they reach a breaking point, and all of a sudden, they're not having intelligent conversations about why the political elite are abusing the system and reform is needed. They just start throwing Molotov cocktails at public buildings and burning shit down. And that results in major political changes and major policy changes. So I think that where we're headed is not to a Zimbabwe or Argentina style or any of the other nonsense that some of the gold pumpers will sell you. We're headed toward an economic story which is about long-term economic stagnation and really lousy living and working conditions for working class citizens of all of the developed nations of the world that persist for decades to come. Now, I don't predict that the working class citizens are going to put up with that. In fact, what I do predict is that they will, for very good reason, and we're seeing it particularly in France right now, absolutely demand we're going to force the leadership out of office if things don't change and change soon in order to do right by the working class people. That's exactly what they should be demanding because, frankly, they have been getting screwed. Well, what tends to happen in those cases is you get political leaders who will tell those people anything they want to hear, even though they don't really have any viable solutions or even a deep understanding of the economics involved. So you get your extreme right and extreme left political characters into office who oftentimes make just ridiculous decisions that are not sustainable. You get the socialist, well, we're just going to make everything free and give it away, and businesses who've been gouging everybody for so long deserve what they get. Tough luck, which was what Nicolas Maduro announced in Venezuela when he said the people have the legal right to break into stores of electronics retailers and steal giant TV sets. You will not be prosecuted. This is your right. That's super popular, gets lots of votes. It also forces all of the electronics retailers in Venezuela out of business so that there is no economy in that country anymore. So you're going to get to, I think, some very turbulent times in the next decade. The economics themselves don't force the kind of blow up that the gold bugs would like to believe is coming, but I think the populist uprising that will occur in response to the great injustice of wealth inequality, which has persisted for the last, couple of decades, that's all going to come to a head, and it's going to change things. What direction is it going to change things in? Are we going to have debt forgiveness, a debt jubilee, and free college tuition for anybody, all under social spending programs thanks to modern monetary theory? Well, guess what? If that happens, and I think it's entirely plausible that it will happen, that's inflation, baby. If you thought quantitative easing was not going to be or was going to be inflationary and you got that one wrong, trust me, if you get to helicopter money and universal basic income and free college tuition for anyone who wants it, that's inflationary, and that's where gold and silver are going to really outperform. Now, don't be surprised when you get hit with windfall profits taxes, because if you're a gold and silver investor, you're going to be perceived by the at least some of the extreme, government leader populist types. You're going to be the bad guy, and they're going to have to punish you with windfall taxes for that amount of money that you didn't deserve to make for being smart enough to be invested in gold and silver. So don't be surprised when that's coming. But the world is going to change in scary ways. And generally, if you look all through history, when has it been most important to own precious metals? When the shit really hits the fan in the geopolitical world, not just the financial world. And I think that's coming in the next decade, unfortunately. And I think that that's going to make precious metals a very important part of anybody's portfolio.
Well, we certainly hope you got a lot from this first part of our interview. And in the description below, we have put links to Erik's podcast Macro Voices and to his recently published book, beyond blockchain. What we basically took away from today was that Erik believes that short term, the dollar is likely to become stronger, and gold and silver prices may indeed fall as a result. He is not stating he is certain that this will happen, but that it is likely. He sees the US dollar eventually being replaced, possibly in the 2030s, with a new form of digital currency, but not necessarily a cryptocurrency. He also adds that gold is not a get-rich asset, but a stay-rich one. Part 2 of the interview will be published tomorrow, where we discuss precious metal pumpers and why they do it, and the techniques they use. We also discuss central banks and why the future may indeed be scary for us all. So don't miss it. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.